Verizon is raising billions of dollars. Is this because I didn't pay my bill? Investor Beat starts now. Thanks for watching. I'm Chris Hill. Mixed day on Wall Street with the Dow up, but the NASDAQ being pulled down thanks largely to the bad day that Apple is having. Joining me in studio today, Matt Koppenheffer, Matt Argersinger. Guys, our top story, Verizon is launching the largest corporate bond in history. The deal totals $49 billion, more than double the previous record of Apple's $17 billion offering. The telecom giant will use the money to pay Vodafone for its acquisition of Verizon Wireless. This is a lot of money. It seems like the right move, but it also seems like if you're a shareholder, you got to be a little concerned.
Yeah, I'm not primarily a telecom analyst, but I just, the strategic rationale of rushing to do this, paying so much money for it, doing such a large acquisition, I just, from Vodafone's perspective, I think it's a great deal. From Verizon's, I don't know. And then you've got this huge amount of debt that they're going to be taking on. I'd be a little cautious if I were an investor. We
talked last week about LinkedIn raising over $1 billion with a secondary offering. Are we going to see more of this? Because money is now so cheap that if you've got a strong balance sheet, you've got license to raise as much as you can.
I think that's the case, especially the size of this deal, and not only that, it was oversubscribed. So there's a huge, healthy appetite for this amount of debt, which is pretty surprising. But if you're a big company right now and you've got some big investment plans, and we really haven't seen a lot of that lately, but if you're interested in raising some debt, you can actually get the demand for it. So I do expect we might see some levering up of some balance sheets in the next few years.
The last couple of years, shares of Verizon really haven't performed that well relative to the market. What do you think of the stock?
Well, I don't know about Verizon, but I'm gonna jump off of what Maddie just said. Is that this is a great environment to raise debt. There are a lot of companies that are probably looking at that now with a debt deal this size. Barclays, Bank of America, J.P. Morgan, and Morgan Stanley were the lead underwriters on this deal. It is going to be a fee bonanza. This leads to even more debt underwriting. That'll be good for the banks.
The hidden winners.
Hidden winners. Well, not so.
As always.
I like it. Let's get to some of the day's movers and shakers. Apple getting pounded the day after unveiling 2 new iPhones. No fewer than 4 Wall Street firms downgrading the stock as well. We talked earlier today, the China mobile deal that didn't happen yet really seems to be hurting them.
That is the story, I think. I mean, everyone, including me, thought that was in the bag, that that they were going to sign a carriage deal with China Mobile. That was going to, of course, flood the Chinese market with iPhones. China Mobile having more than 700 million subscribers, biggest mobile phone operator or telecom operator in the world. It didn't happen, which is surprising. So I think that's why the market is selling Apple. Plus, the iPhone 5C, not exactly as cheap as a lot of people thought, price-wise. So that kind of puts into question how much Apple is going to be able to do in emerging markets like China.
Pretty colors, though.
Very pretty colors. Wow.
A lot of new colors. Polycom up big after the IT company announced a plan to buy back $400 million worth of stock. Again, another stock, last couple of years, not really performing all that well.
At first blush, I wasn't crazy about this news because they're going to be raising talking about debt again, raising $250 million in debt to buy back the stock. Usually not a move that I like to see. However, Polycom's got a great balance sheet. They've hit the skids in terms of demand the last year or so, the last year and a half. Now, if that comes back, that could be good for the company, and it could make them look like geniuses buying back a whole bunch of stock now. So we've got to wait and see, but it could be a good move.
Shares of Pandora rising just 1 week before the release of Apple's iTunes Radio. No respect for Apple. First on the stock, and now we're not afraid if we're Pandora. We're not afraid of iTunes Radio?
I guess not. I mean, I think that's one side of the story is the idea that, well, Apple's selling less smartphones, less people are going to get the new iOS, so therefore a lot of people aren't going to be getting iTunes Radio, which helps Pandora with its already huge lead in internet radio. Same token, though, I almost think there's some analysts out there, and I agree, saying that maybe iTunes Radio also legitimizes internet radio in the first place. It's going to cause more people to jump from terrestrial radio to internet radio, which again helps Pandora because they've already got a huge lead with their 75 million listeners. So either way, Pandora seems to win in this case.
And finally, Facebook hitting a record high earlier in the trading day. I said it before, year 2 going a whole lot better for Facebook than year 1 as a public company.
That is very true. What I love about looking at this today is if you look back to November of 2012, Facebook as a company was valued at about $60 billion less than it is today. It's about a $110 billion company now, $60 billion less just not even a year ago. And when you hear people talk about, oh no, you can't possibly buy individual stocks because the market is rational, the market is efficient, I look at this $60 billion difference here. The market doesn't know what the heck it's doing for not all the time, But there are many, many instances, and this is definitely one of them.
All right, that's going to do it for today's news. Give me a stock I can put on my watch list.
Sure, Lululemon. I report earnings tomorrow. You know, it's been a few months since Spandex Gate, I guess you want to call it that. Christine Day, CEO, is leaving soon, so we don't know who the replacement is for her. So I just wanted to see what their earnings come out with tomorrow. I mean, it's been a terrible market for retail apparel over the last few months. Maybe Lululemon shines. I don't know. We'll see.
Whoever that next CEO is, they got a tough act to follow.
Oh, very tough act to follow.
All right, what about you?
I can't stop talking about this story, but Bank of America, among 3 companies that was kicked out of the Dow. And I'm going to be watching Bank of America. I'm going to be watching Bank of America to see how big of a deal this is, that Bank of America is no longer in the Dow. I'll give a spoiler alert. The answer is probably not at all.
Last year, #1 performing stock in the Dow.
That's a good one to kick out.
All right, for Matt Koppenheffer and Matt Argersinger, I'm Chris Hill. Thanks for watching. We'll see you tomorrow.